What's up, my good people? Happy Sunday to you all. Hope everyone is having an amazing weekend. And the Potter here again, and today I'm here to share some mind-blowing information with you guys. I know it's been a while since I shared my last video on here, which is about 3 weeks now, and that's because I've been trying to figure out on how to make my videos more educative to you guys. Because most new traders I come across, most new bees that join our Telegram group, the major problem they always have is understanding how to read the CFCT data correctly and combine it with the supply and demand methodology to help them make a good trading decision. Because most of them are used to trading with support and resistance, which to me doesn't really work, because that was what I used on my first 3 years of trading, which I struggled and lost a lot of money, but since I've been trading with the supply and demand methodology and I'm combining it with the CFC3 data, doing what the institutions are doing, I have been able to be very profitable. That's why on today's episode is going to be more educational video, because I'm going to walk you guys step by step on how I have been able to use the CFCT data and the supply and demand methodology to call out a couple of massive trades for the past 3-4 months now. So on this video, if you come across this video, I want you to pay good attention and listen to what I'm going to share with you guys, because what I'm going to share with you guys is going to blow your mind. And if you are able to understand it and apply it on your trading, you will see that your winning rate is going to increase very well. Because one thing I always tell people is that if you really want to be profitable in this market, you have to understand how to trade like the banks. When I mean how to trade like the banks, what I simply means by that is you have to understand what the big boys, the people that move the market, the institutions are doing with their position, and try to trade in that same direction. Though when I want to catch pullbacks on the market, that's when I apply my retail sentiment, which I know that most of you guys that are going to watch this video, retail sentiment will not be new to you, most especially the people that has been with me from the day one. Like a couple of guys I have on the Telegram group, which has been able to master my style of trading, and they understand my style of trading. So I'm making this video to educate you guys more. And if you are new and you come across this video, I want you as well to pay good attention on this video and understand the things that I'm explaining. It might not make sense to you, if you don't watch the full video to understand everything. So that's why I want you, if you come across this video, to give me that little time to walk you step by step on how to use the CFCT data and the supply and demand methodology to trade. I'm going to show you a couple of trades that I've used it to call out on the past, which played out massively. And the first pair that I'm going to use is the Gbpusd, which is one of my favorite pairs to trade. So without wasting much of your time, guys, let's quickly dive into it. Okay, looking at this chart right now, you can see that my chart is well marked out and clean, like always. So I'm going to start with what is happening currently right now on Gbpusd. So around this area is July 17th. So let's go and look at the data and see what number the data was on July 17th. Okay, so here we have July 16th. This is July 16th. So that's the area the price was on July 16th. So in case if you have not built your own spreadsheet because you don't have the data, I think I'm going to be showing my full data here. So it's an opportunity for you to screenshot it, and I as well have a video on my channel that I explained how to build your own spreadsheet. So let me show you guys my data fully before I come down to where I'm going to be using to explain to you guys what is currently going on and how I was able to use the data in the past. So look at it. This is GBP USD non-commercial data. This is the long and short, so you can screenshot it as you watch the video. So I'm going to slowly scroll down so that you can be able to screenshot it, or if you want to. So okay, that's it. So now you can see that the previous max out number on GBP USD, because if you look at here, you can see the maxed out number currently is 188,000. Their previous was 135,000, which they broke that record recently and got their new all-time high on their CFC, on their long position on GBP USD, and their mastered number on short is 154,000, which is far below it currently, and the minimum number on long that they have ever gotten to is 1.16. The minimum they have ever gotten to on short is 1,364. So let's go down now. So as you can see, when they got to their previous mastered number, this is when I stopped looking for long position here, because one thing I understand very well for the past 2 years now that I've been using the data to trade is whenever the institutions get close to their mastered number, or they get to their mastered number, they will start offloading those positions, which I'm going to show you a couple of pairs that they are currently doing that, which is the ones I'm looking to trade for the coming week. And when I says for the coming week, I don't mean this new week we are going to step in tomorrow. No, I mean for the next 2-3 weeks, because I'm more of a swing trader than a day trader. I would like to hold my trade for a couple of weeks, possibly months. So there are times that I will hold trade, they will retrace a bit. I think that's what most people don't like. Most newbies that come into the Telegram group don't like. So when they join my Telegram group, they will expect to start making millions on the first week, and because the channel is free, I share everything for free. So most people that comes on the channel don't value it. So when they join the channel, they start taking trade, maybe they take 1 or 2 trade that doesn't play out immediately, so they will leave the channel. So that's why I'm making this video, to clear to you guys on the channel how I really trade, how to really understand how all this work. And if you're a day trader, you are looking to trade, to scalp on the 15 minutes or to jump in and out of the trade, this my trading style is not for you, because my trading style is for people that actually want to learn how to trade along with the banks and hold markets for a long time. When I want to trade retracements on the market, that's when I apply the retail sentiment, and I'm going to as well show you guys how I apply the retail sentiment. But I want to show you guys what is currently going on now before I go down to how to use the retail sentiment. So guys, pay very good attention to this video. If you look here now, you see that when they got to their new all-time high on their long position, they broke the record of their previous number of 135,000. They broke it. They got 188,000. So when I saw this, that's when I stopped trading, looking for long, because I know that they are getting to their max out number and things are likely going to start changing. And looking at here now, you see this is when we got to 183,000 here. And here let's look for where is this area on. Okay, this is the area here. So if you look, this is the area. And when price got to this area here, when they got to their new all-time high, this is when I said to myself, now they are on their new all-time high, and my retail sentiment is showing me that as the institutions were pushing the price to the upside, retail traders were busy shorting. So here, retail traders shorted this market to their maxed out number, which is 96%. When they got to this, their maxed out number 96% here, and they got to this area here, I tried shorting this market here, but unfortunately it didn't play out. I was expecting it to drop to here, but it didn't play out because they got to their 96%, but their position sizing was very small, so it was not aggressive enough for them to, when they offloaded, for price to go to the opposite direction. So when this little pullback happening, the market continued to the upside. So around this area was news. So, and I know that news is not really important, because news is the decisions that the institutions has already made for the past 2 weeks. So that's what the news is all about. So when the news release is something that they have already made the decision. And one thing I have understand again with the data is that when the news comes out positive, it always reacts to the chart negative. And when I look at the data, I will see that the market reacts to what the data is actually saying. So now I know that what the institutions does is, when they are making their decision, they will push out false news out there for retail traders to do the opposite before they will drop price, because the institutions doesn't want retail traders to be profitable. They don't want you to sell when they are selling, and they don't want you to buy when they are buying. So for me, based on that information that I know, immediately this news candle closed on the 4 hours, I was watching this second candle here to see what they are going to do with this second candle here. So on this second candle was when I placed my sell, because I know that they have gotten to their maxed out number, and the price is likely going to shift to the opposite direction for the short time, because they are going to make their intention known on the market if they are going to start going to the opposite direction. So based on this based on the retail sentiment, immediately I saw this, I placed my shorts here. And after placing this short, I saw that these retail traders started offloading their shorts and start getting into long, because of this news candle here that is massive. The retail traders was like, oh, I think this our position, we messed up here. This market is not going to sell. This market is buying. This candle is very strong. So they start closing up their sell position, start getting into long. That's when the institutions, take over their short position and, offload their long to them. And this market rally to the downside here. As you can see, this is where I took my profit. And when the next data came out, you can see when the next data came out on July 23rd, they got to their new all-time maxed out. And when they got to their new all-time maxed out here, I was expecting the market to start selling aggressively. You can see for the first week they took profits, which was July 30th. Let's check where is July 30th. Okay, July 30th was somewhere around here. which is where I actually took my profit, because this is the area I took my profit. So the first week they started taking profit on their long. Let's see, on July 30th they took 22,000 profit on their long position, and they added 7,000 on their short. The market dropped. When this market dropped to here, for some reasons, based on, you have to understand that when the institution wants to start selling, it's not immediately that they start taking profit on their long and start adding to short. This sell with we start reacting on the market aggressively, though sometimes it happens like that, but not all the time. So when this market dropped to here, based on, this is where my take profit was here, as you guys can see. So I took profit before this breakdown here. So when this breakdown here happened, I was expecting this market to rally to this new supply that was created here and continue to the downside, but unfortunately that didn't happen. But something very interesting has been happening on the chart ever since then. Look, on June 6th they took 39,000 profits on their long again. On their short, they did not add, they took 2,000 profits. So what we are actually seeing here is that the institutions are secretly offloading their long positions here and getting into shorts little by little. They took 39,000 profits on their long again on August 6th. Then August 13th they took 23,000 profits on their long position again. But you can see that since they were taking the profit on their position, market was rallying to the upside. And I'm going to be honest with you guys, I did not trade all here. Because one thing with me is that I don't like going against what the institutions are doing, what the big monies are doing. I know that this is actually a very nice move, but you have to understand that there were the supply zone was here on a daily time frame, a massive supply. So when this minor supply here got removed, I was expecting this market to come here and continue to the downside, but this area got taken out and all this happened. So when this was happening, I just said to myself, let me just focus on other pairs that I trade. Because the market is not aligning with the data currently. And you can see they started adding to long again. On August 20 they added 23,000 to their long again, and August 27 they added again. Then September they added 8,000. So what I'm looking at here is that all these new addings here is not really what I'm after. Is knowing that they have already gotten to their maxed out number on long, and they offloaded for 3 weeks, now added to 3 weeks, but their adding is not yet the same with their maxed out number, and or they have broken the maxed out number for me to see that maybe they want to keep on taking the position higher. So because of that, I've been stepping aside to clearly observe the games that the institutions are playing with their position here. So last week, when the data came out last week on September 10, I saw that they added 8,000 here and they took profit 9,000 on their short. So what I'm actually seeing here is that they are trying to take their short to a very low number. So when they start adding to their shorts again, the market will possibly drop for about 3 months or even more. So now looking at their short position is currently on 51,000, and now you can see that they took 18,000 on September 10, which is this week data. they took 18,000 profits on their short, on their on their long, and on their short they just took 900, let's just say 900 on their short, which is not anything. So you can see now that they are now offloading this their long. They are not really doing anything with their short currently. So what I expect them now is to keep on offloading long and start adding to short aggressively. And when I start seeing price action, align with the data, that's when I'm going to start, shorting this market. So as you can see, this market dropped to here, and now we are seeing this rally. I know a lot of people that started buying in this area because of this bullish candle. Some people call this bullish engulfing. Is there a possibility for this market to continue to the upside? There is a possibility, but the chance is very poor, because what I'm seeing here, if they took 18,000 profits this past week on their long position, and who knows, this coming week they may as well took a massive profit on their long again, and markets will continue dropping. So I'm more waiting for shorts than looking for long here. If the market continue longing, I'm going to just stay aside and trade other pairs. So you can see now that the market is aligning with the data. You can see that the institutions are now offloading their long, and what we are seeing here, we saw this pullback and this market is rallying to the upside now. There is a possibility for this market to do something like this, maybe come back here and do something like double top before we start seeing that aggressive selling to the downside. But I'm not really interested in longing GBP USD currently. Looking at the 4-hour time frame here, you can see that the retail traders position got to 94,000 here. When it got to this 94,000 here, this market drop and remove a demand zone on the 4 hours, created new supply here, and this market push back and get into this supply zone. I called out this short on my Telegram group. I expected this market to continue dropping to the downside, but unfortunately when it got to here, this EMA 200 held it, and this demand zone here as well, this market pushed to the upside a bit. But if looking at this area and looking at what is actually currently going on here, you will notice that there are no much buyers coming in here again. This market is slowing down, the buying pressure is slowing down, and sellers are slowly stepping in. And as once this two demand zone here is removed and EMA 200 is as well above the price here, by then this market must have given us a new supply here on 4 hours. So I will just be looking for a pullback to start shorting, because next week data, I expect the institution to as well offload on their long position. Let me show you guys. Let's go to AUD USD. I'm going to show you guys some mind-blowing information, like I said, on a couple of pairs that I'm going to show you guys more details on. But what I'm showing you guys now is what I'm looking forward to trade for the coming week. So looking at AUD USD right now, you will see that AUD USD, if you have been following me and following my channel for a very long time now, you will know that I have always been saying it, that the institutions hasn't really been interested in buying AUD USD for the past 2 years now. What the institutions has been doing is they will drop price. When they go to institutional demand area, they will rally price a little bit to the upside, to area where they will start adding aggressive to their short position again. So let's go to AUD USD data. This is AUD USD data. You can see, look at the net position here. It's been negative since October 10, 2023. It's been negative. Although I have this data too, like I have the data from 2020, but it's very hard to, add all of them to this spreadsheet. So I just cut it, the data short. That's why I only use from 2023, because if you want to really study this data, if you study what happened on 2023 and what happened this year to date, you should be able to understand it better. So that's why I did not bother to add the data to like 3-4 years ago. So if you look at here, but I know that the institutions has been very bearish for the past 3-4 years on for the past 3 years on AUD USD. So look at the max out on long 144, max out on short 145, minimum on long 5,000, minimum on short 0. So you will see that. Let's go down to here now. Looking here now, you see that the institutions hasn't really been interested in anything like longing for a very long time, but recently they started adding to their long, and they added to their long get to 106,000, and ever since they get to 106,000, look, they have been taking profits on their long. You see, they have been taking profits on their long. So they took profit on their long, look, for about 1 to 3 for 4 weeks. They added for 3 weeks. Now they are taking profit again. But if you look at what is going on here, why I'm kind of concerned with what is going on here is that they are taking profit on their longs and they are taking profit on their shorts. But if you look at the net, well, that's where your net position comes in. If you look at their net positions here, you see that their net position went from bearish to a little bit bullish, then it went neutral. Now it's getting into bullish again. So if you look at the charts here, I called out this trade recently on the Telegram group and on Twitter as well. So the market dropped. After this drop, I closed this is where I took profits. You can check the Telegram group to see it. So I took my profits here, and we are having this rally here now, and we are contacting a new supply area. So am I looking to start shorting AUD USD? Possibly yes, I'm going to short it if the coming weeks I see the price action on the market, because I know that like the data is showing me bearish. And looking at here now, you will see that we removed a demand zone here. We created new supply here. Look at this gigantic bearish engulfing. We had these two candles. We have another gigantic bearish engulfing candle before this pullback. So there is a possibility for this market to continue to the downside, but the safer way to trade this market is to allow it, take out this zone like so. So there is a possibility for it to do something like this. Come here, give a little pullback. So you look to start shorting it from this pullback all the way to down. And if this market comes back to this area, there is 80 to 85% chance of taking out this demand zone. And if this market take out this demand zone, that means AUD USD is in trouble. The bearish is going to be long. So this is the two pairs that I'm looking to trade for the coming week. But now let me take you guys to the mind-blowing information, which I'm going to use GBP, JPY and USDCD to show you guys, and oil as well, which is the ones I'm looking to trade. I will show you the USD JPY and GBP JPY is the same thing. So which one should I use? Let me use GBP JPY because I trade it small, and we currently have trade going on here. Look at this trade. I called out this trade on Twitter and I call it out on Telegram group. Most of us are still holding the market, but I closed my position this Friday. because I know that the institutions are getting to their maxed out number on short, which if they do, this market is likely, once it comes in to here, is likely going to continue back, if not even shows crazy sign, and there is it's possible to even continue back here. You can call this a demand zone like so, which is the reason why I took my profit. Can call this a demand zone here. So there is a possibility for this market to reverse from here. So that's why I close off my position. And let's look at the data here. Okay, this is the data. You remember, every Japanese pairs trade exactly the same. USD, JPY, GBP, JPY, every JPY pairs trade the same. And let's look at their maxed out number on long. If you look at their maxed out number on long is 237,488. Their maxed out number on short is 105,000. Minimum on long 10,000. Minimum on short 5,000. So let's now scroll down. Okay, you see when their position size on July 9 got to 223,000, which is close to their maxed out number 237,000. You can see that they got very close. Look at, where is, okay, July 9. Let's check July 9. Okay, this is July 9. When they got to their maxed out on July 9, then on July 10th, this candle pushed to the upside. July 11, we got this massive bearish engulfing. Remember that this is happening on daily and a monthly supply area. This is a monthly supply area because there was no supply area here on the daily time frame. That's why I had to mark out this weekly supply area here. We got this. So when we get this, I know that okay, something is changing on this pair. The institution got close to their mastered number now, and we are getting this aggressive selling coming in. Then the next data, let's check. This is July 16th. So let's check on where is July 16th. Okay, July 16th. As you can see on July 16th, the institution took 25,000 profits on their long. You see, they took 25,000 profits on their long here, and they added 5,800 on their short. Let's see. You see this area on July 16th. So when this happened, this is where I called out this trade. Immediately this massive candle closed. I'm like, okay, guys, new supply has been created. A massive bearish engulfing here, massive bearish engulfing here. I called out this trade, but unfortunately when I called out this trade, I was holding a bad trade, so I only called this trade on my Profem account. When it got here, this is where I end up jumping on the market, and I ride it all the way to here. Then this buying here, I didn't get it, but this is where I want to explain something for you guys. So when all this drop was happening, let's check out what the institutions were doing with their position. Okay, when all this drop was happening, the institutions on July 23rd, they took another 26,000 profit on their 26,900 profit on their long. They added 17,000 on their short. Then on July 30, they took 33,000 profits on their long. Let's check where is July 30 on the chart. Okay, this is July 30. So let's check where is August 6th. Okay, this is August 6th somewhere here. So on July, see August 6th, you see they took 60,000. So what is happening here? The institutions are aggressively taking profits on their short, but because this market contacted this institutional demand area here, immediately they contacted this institutional demand area, market starts rallying to the upside. I know a lot of traders that long this market. Some didn't even long from here. Some started longing around this area, both on Twitter. On Twitter, some started longing around this area. So when I saw everybody longing this market, because of this inner information I had, okay, as the market was rallying to the upside, the institution was busy taking profit. They took 60,000. They took another profit, 13,000. As it was rallying to the upside, look at their long. They added 1,000 something on their long. They added 1,000 something on their short. Then on August 27, the institution took profit 6,000 on their long, and they took 4,000 on their short. So let's look at where is August 27 on the chart. Okay, this is August 27th, somewhere around here. So based on, I know that even as this price is rallying to the upside, I know that this market is trying to make a lower high, because look now, this massive drop. So they had to rally the price. The institution has to rally the price a little bit to lure more retail traders into long, because they have to transfer their long position to retail traders and take over the short that the retail traders are holding. So for them to do that, they have to give space on the market to rally to the upside. So based on, I have the inner information, knowing that these institutions, the market makers, are not interested in buying. So all this buying that was happening here, I wasn't interested in it, because I know that all this buying was a setup. So immediately this happened, because EMA 200 here has crossed. Look here, EMA 200 crossed here, and EMA 200 here. So I know that whenever EMA 200 cross, the market is clear. Like, as this EMA 200 is above, I know that we are still on a clear bearish move. So as this move was happening here, I was as well analyzing it. So all this move here, I did not bother about it. I did not buy it, because I like a high setup on the market. When this happened here, this is when I started shorting this market around here, and I held my trade to here before closing the market. So when all this was happening, a lot of people I know was busy, buying. But because I have this data, that's why it's good to create your own spreadsheet. But because I have access to this data, I know that these people, they are not interested in buying currently. They are more interested in shorting. So look here now. You see, they took another 7,000 profits on their long position. They add 7,000 on their short on September 3rd. Let's look at where is September 3rd. Okay, this is September 3rd. You see, immediately they added more on September 3rd. We got this close candle, this massive bearish engulfing. If you check my Twitter and if you check the Telegram group, you will see that this is exactly when I called out this trade. I said that this trade is going to drop to here, and ever since then this market has dropped. Let's check how many pips. This market has managed to drop over 700 pips. So over 700 pips, because I'm trading with the direction the institutions are trading. Now this September 10th data again, as you can see on September, they took another 7,000 profit on their long. Again, they added 7,000 on their short. But why I closed my trade is because I know that the institutions are now close to their maxed out number on their short position. Take a look here. Their maxed out number on their short position is 105,000, and they are currently on 98,000. So they just have and this, you can call this 99,000. Well, let's just call it 98,000, because it's 98,894. So they are very close to their maxed out number of 105,000. That's why I close my trade. Is possible for this week we are this new week. There is a possibility for this market to start to continue to drop more to here before we start seeing that buying momentum start kicking in. There is possibility for it, and there is possibility for it for them to take it a little bit more down. But based on, I know that the institutions are close to their mastered number, I'm no more interested in shorting this market. If I'm going to short, like if we get into the new and look at 4 hours, 4 hours here, we are close to a 4 hours demand zone here. This market, there is a possibility for this market to come into this 4 hour demand zone, and we start seeing buying momentum start kicking in here. There is a possibility for that. So I'm going to be careful on this one. If I'm still going to look for shorts, it will be from the smaller time frame. So you guys see how this market has played out based on using the data properly. We have been able to call out all this massive move. So let's look at USDCD, which is another beautiful bad boy that I called out a few weeks ago, and we banged this market to the downside. Okay, look at USCD here. Look at USCD here. This is where I called out the trade, and let's go to USCD data. Okay, if you want to copy the data, look at the data here. If you want to copy the data here, their maxed out number on long is 219,000, and their maxed out number on short is 105,000 here. So if you want to copy the data, this is it. That will slowly scroll down. Okay, so now let me walk you guys step by step on something very, very important to understand on this chart and how to properly read this data. So I'm going to start it all the way from here. So if you look, the previous maxed out number on USDCD long was 170,000, and 166,000. So they break that record. They got to 170,000 on June 18. Let's look for June 18. So inside here, market has been consolidating for a very long time inside here, which I don't want to go back. I want to use how the market reacts when they get close to their mastered number, and how you can be able to use that to help you make a good trading decision. So let's look for June 18. Okay, this is June 18 area. Actually, when the market got to their max out number here on June 18, I expected this market to sell to the downside aggressively. But when they got to their new max out number here, I called out this trade here. And when I called out this trade here for my members on Telegram, let me look for rates on here. Okay, that was around here. So around here, when this market was going here, somewhere around here, when I saw this here, this is when I first took my first shot, which didn't play out. So let me just focus on daily time frame, using the daily time frame to explain to you guys. So when this market got to this area, this is when I called out the first shot. I was expecting this market to take out this demand zone here and continue to the downside. And if you go to the Telegram group and scroll to June, you will see this chart. When I posted it, I said that we shorted this market, I said I expect this market to take out this demand zone and continue to the downside, because the institutions has gotten to their new master number. And look at what happened. On June 25, they took 20,000 profit on long, and on June 6th, on July 2nd, they took 8,000. On July 9, they took 13,000. So here they took all these profits on their long when they got to the master number to make their intention known that something is changing. You have to understand that this data is not something that immediately you see the institution start taking profit on long and adding to short, immediately market will start dropping. It happens like that sometimes, and sometimes it doesn't happen like that. But having this information will give you idea of what is likely going to happen in 2-3 weeks time. So because I know that they have maxed out on their long position here and they took profit for 3 weeks, I know that they have made their intention known on the market. So let's look at where was July 9. So okay, this is July 9. I think this somewhere here is July 9. So these 3 weeks they took profit on their long position. Market drop and contacted this institutional demand area. I was expecting market to take out this institutional demand area and continue to the downside, but I said to everyone that when the market got here, if this demand zone got taken out, I expect this market to continue to the downside. But if it doesn't take, if the price doesn't end up taking it out, there is a possibility for a market to rally to the upside. So when we shorted this market here, we closed our position around here when we start seeing this happening here. And just like what, this is why I brought up this, why I did not start from here, is because I want you guys to understand something. If you notice, this is exactly the same thing that is currently happening on GBP USD data. Let me quickly show you guys, because I want you guys to understand something. Look, you see that immediately they got to this their master number, they took profit for 3 weeks. They added on their long for 3 weeks. Now they are currently taking profit on that long again. So look at USCD here. When they got to their max out number, they took profit for 3 weeks, make their intention known, and they start adding to their long again. And markets rally to the upside and contacted this institutional supply here. And this when news came, they what the institutions always do is that they always make sure that they play the game in a way that retail traders will always feel. Look at, they use this news to create this gigantic candle here, this strong bullish engulfing candle here. And when this news came out as well, look at how gigantic this candle was with the news. So a lot of retail traders already believe that, okay, they took out this supply area here and this breakout, everybody was buying, and immediately market changed it and start dropping to the downside aggressively, and we were able to call out this short. I actually held my short to somewhere here because I closed up this trade. I needed some fun, then because I was holding a couple of other trades, and this whole drop happened. So you see that it's not immediately the institutions start taking profit on their long that markets intend to start dropping aggressively. Immediately they master out on their long. Sometimes it drops aggressively, sometimes it drops a bit, then rally to the opposite direction for them to look confused retail traders for dropping the market to the downside aggressively. So when this happened and all this adding was happening, one thing we missed that I trade so many pairs. So when this was happening, I was in other pairs. So I think I did not cut this move, or even though I did, I think it wasn't down here. So I waited because I know that something is already changing. So I waited and make sure that the market correspond with what the institutions were doing before I started taking my move. So look what happened here now. So when they added for that 3 weeks, the 4th weeks, they took profit on their shorts. They took profit on their long. They took profit on their short. Look at what is happening here. They took massive profit on their long. They took a little profit on their short. And look at what happened here. They took massive profit on their long. They took a little profit on their short, which is on August 6th. So let's look for August 6th. So this is actually August 6th area here. So this is actually August 6th here. So immediately they took that profit on their long position. Do you see what happened? This market started dropping aggressively. And look at what happened on the following week. They took 3,000 on their long. They took 1,200 on their short. But if you notice what is happening here, you will see that they are aggressively taking profit on this long. They are not really doing anything with their short. Okay, look at what they did here. If you calculate this 1,000 here, they added 12,000 here. So they are not aggressively adding on shorts currently, but they are aggressively taking profits on their long, and price is dropping. So now you see they took profit. So let's look at what is currently going on. As they took all those profits, you see that the market aggressively dropped to the downside. Then let's see August 27. Let's look at August 27. You see on August 27 they took 54,000. September they took 29,000. Now September 7th they took another 7,000 profit, and market is just rallying. For that past 3 weeks they've been aggressively taking profit on their long, but market is rallying to the upside. So now let's look at what's happened on USD JPY. Look at USD JPY. If you remember from July 30, when they were when they took this at 3,000, 60,000 profit, 13,000 profit, the market was rallying to the upside. Remember, let me show you. I actually used GBP JPY, not USD JPY, though they are the same thing. You see that all here the market was rallying to the upside. You see, as they were taking that massive profit, market was rallying to the upside. They allow retail traders to push the market for them on a zone that will be much favorable for them to take more profit and drop the market to the downside. And after that, look at what happened. Market dropped aggressively. So now it's the same thing we are seeing here. Look at here now. Look at here now. You see, EMA 200 is currently above, and look at here now, EMA 200 is currently above, and we see that the institutions are currently taking profits on their long. So I know a lot of people that are looking to long these markets here. So what I expect is for this coming week, for this market to push above here, then comes back inside and start dropping to the downside. It's possible for the market to get to this supply zone, which I don't think so, because this is Fibonacci and we are currently on 61% Fibonacci. It's possible for you to do something like this and come to 78 or shy off like this, which is what I expect before the market start dropping aggressively, because I'm not going to look for a buying position when the institutions, the people that the market makers are actually taking profits on their long. So it's much favorable to look for a selling position. So we know that they are taking profit, and we know that CFCT data is submitted to CFCT on Tuesdays, but we get access to it on Friday night. That's when we get access to it. So based on, I know that the institutions are currently taking profit on their long. My game plan here is, okay, I know that these people submit this data on Tuesday. So Monday, I'm not interested in trading. Why I'm not interested in trading is that Monday candle can be a bullish candle. So what I'm actually going to do is to wait. Monday candle might be a bullish candle, a struggling candle like this, or could be a bullish candle. Then Tuesday, if they take more profit on their long and add on their short, Tuesday candle is what is going to bring it in back. So when Tuesday candle closes, if Tuesday candle closes as a bearish candle, then I will start shorting. But if Tuesday candle closes as indecisive candle, I will look for what Wednesday candle is going to give me, because I'm not interested in looking for buying, because I know that the data is clearly showing me bearish sign. And since when the institution took this 54,000 profit on long, 29,000 profit and 7,000 profit, it hasn't really played out on the chart. Market has been rallying to the upside, because after they removed this institutional demand area here, this zone here, this demand zone here is not strong, because when it got created here, they removed it with this weak candle. But as you can see, market respected it. When it came into the demand zone, it rallied to the opposite direction. So now it's contacting a minus supply here. It's contacting a minus supply here, which even if they play around this supply here, this is the major supply. As long as this market hasn't removed this area, I'm still very, very bearish, because I trade with the direction that the institutions are trading. So what I'm actually going to be waiting for is to see Monday candle to be a bullish candle, maybe come inside or even kind of, push above here and week out or something like that, and Tuesday candle to close maybe as a bearish engulfing. So that's what I'm going to be looking for to start selling. So all I'm saying is that I'm not interested in buying, because the institutions are not bearish. So I'm not going to go through all the pairs. I'm only going through the ones I'm looking to trade for the coming week. So it will be difficult to go through all the whole pairs. But if you're on the Telegram group, you can always see me calling out a lot of trade. And I want you guys to know something. I trade with multiple different accounts. I have a Profem account, I have my own personal account I trade. So most of these trade I call out, I don't place everything in the same account. Not every setup that I post that I trade. The reason being that I might already be on 4 different positions before that setup comes. The reason why I post a lot of different setups on the Telegram group is to give people that was not able to jump on the previous trade another trade idea they can look forward to trade. It's not that when I post 10 different setups that I trade all of them. No, I'm a trader that I use a very proper risk management. In one position, I don't risk more than 2% of my account in one position. I used to risk 3%, but as time goes on, I see it as a way too high to risk. So I bring my risk very low, because I trade so many different pairs. So if I'm on a 4 different positions and risking 3% of those my accounts, that's too much. So that's why I bring my risk low to 2%. So I don't risk more than 2% on one trade. And oil is one of the pairs I'm looking to trade for the coming week. Oil, GBP USD, and USCD. That's the 3 pairs I'm looking to trade. GBP USD might not be ready, because we might see a little more weakness on dollar pair on DSY. Though DSY data is not bearish, DSY data is bullish, which I think I'm going to show you guys. So oil is very, very bearish. Let me show you guys oil data and why I'm very interested in trading oil. Let me show you guys oil data. Okay, this is the data on oil. So their maxed out number on long, their maxed out number on short, and everything. So this is it, and you can see my OU data. OU is not a pair that, it's a pair that I don't trade all the time. So I am always very careful with OU because it has volatility just like good. And if you're one of my followers, you will know that for a couple of months now I've been staying away from gold. That's because gold is getting to their maxed out number on long, and gold is in the all-time high. So I don't like buying market in the all-time high, because if it start dropping, no matter where my stop loss is, I will it will take me out. So I'm staying out and looking at good data to get maxed out. So on OU now, so let's take a look at OU. I want to show you guys something very interesting in OU. So OU has been very, very bullish for a very long time, and the minimum they have ever gotten to on their OU short is 64,000. That's the minimum OU short has ever gotten to. So if you look here, OU short position, they've been taking profit on their short for a very long time, and OU short position recently got to 66,000. So if you look, ever since OU short got to 66,000, you see they have been adding back. They added to their short to 74,000, 72,000, 76,000, 115, 155,000. You see that the institutions are now aggressively adding to their short position on OU, while on their long, look at the long on OU. The long, let me just use this area here. Their long was on 369,000. Okay, let's say their long was on 379,000. Since it got to 379,000, they have been taking profit on their long. They have been taking profit on their long. Look, they have been taking profit on their long. And on September 3rd, they took 11,000 profit on their long. They added 38,500 on their short position. September 10th, now we see that they took another minor profit on their long position, but they added 36,000 on their short. So we see that the institutions are aggressively adding on their short position and on OU. And if you look at OU chart, you will see that OU chart is aligned with what we see on the chart. So this is the daily time frame on OU. If you look at the daily time frame here, you will see that the daily time frame is very, very bearish. Let me zoom in. I think I have to look for a way to switch my recording tool to my iMac from my laptop, because the iMac is much bigger and wider. So I'm going to work on that. So look at OU data now. Look at OU charts now. We know that OU now, the institutions are aggressively adding on their short position. And look at what happened here. OU has been moving sideways, and I can still clearly remember that when OU got to this area, there are some traders I know on Twitter that posted OU made a double top and it's on our key level. They started buying OU. So when OU was around this area, when they started buying, I posted OU chart on Twitter saying, I don't think that this is a right time to buy OU, because the institutions, the market makers are not bullish on OU. OU has been very bullish for a couple of years, but since this year we have been seeing profit taking on long, and we have been seeing indecisive move on their short position. But for the past 3-4 weeks now, we are seeing a clear move on OU. We are seeing that the institutions are now aggressively adding back to their short, because they got to their minimum short position, and ever since then they are adding. And it's not that they just got to their minimum. Look at what happened here. Since they got to 66,000, from 66,000 they increased to 151,000. This their position is aggressive, so this is showing us that they are not interested in buying anymore. Like, they used space of 4 weeks to increase from 66,000 to 151,000. Look, 1 2 3 4 5 6 7 8 9. Look, for the past 9 weeks, the institution, for the past 9 weeks, they didn't do anything much with their short. And look at their long column here. For the past 9 weeks here, you see that the adding or the profit taking wasn't big like here. So it took them just 3 weeks to get to 1,000 from 66, letting you know that big monies are currently selling oil. I don't know if you're getting big money are currently selling oil, and it just aligns with the chart. So based on that, this aligns with the chart. Based on that, it aligns with the chart. Now I'm seeing a rally to the upside. This market, there is a possibility for this market to continue dropping from here. If it continue dropping from here, if I see a way to join on 4-hour time frame, I will. But I would like this coming week for all you to rally to the upside, maybe to come into this supply area here, which my Fibonacci is showing me 61% to 78% area, before I will start shorting oil. It will be much nice to short oil from here, or even from here. So I would like oil to rally to the upside. So I'm going to be looking to trade oil for the coming week, knowing that the data is very, very bearish. So here now on the 4-hour time frame here, you see that EMA 200 is above. EMA 200 is above, clearly showing me that market is bearish. So there is a possibility, and if you look, this minor supply, sorry guys, you see this minor supply area here has been removed, and we got this bearish engulfing here on 4 hours, which I don't really care about candlesticks on 4 hours. I'm more confident when I saw a candlestick pattern on daily time frame or weekly time frame than 4-hour time frame. So, but here this area has been removed, and now we are seeing this. So if this market, there is a possibility for this market to start dropping from here to here, which if it start dropping from here, if I see a good opportunity to take a short with a small loss size, a small position, I will. But I would like this market to rally to this supply zone here to contact this EMA 200, something like this. Then if I start seeing that selling momentum coming in, I will start, that's when I will start, shorting this one. So this is how I trade, and I hope that after watching this video, you guys will have a proper way of trading with the data. And if you want to like combine it with the retail sentiment, I have made a couple of videos that I talked about the retail sentiment, which you can as well check out how to use the retail sentiment to know when the retail traders are maxed out, and know what the retail traders are doing to do the opposite, because retail traders does opposite of what the institution traders are doing. So looking at DSY here, you can see that DSY is pointing down, but there is something I want to point out on DSY for you guys. If DSY is going to drop to here, that means it's aligning with our USCD. But let's look at the DSY data. One thing and another thing I want you guys to know is that I'm a kind of trader that I treat every pair differently. I don't believe that there is any pair that is correlated with any pair. The only pair that come close to being correlated with any pair is euro dollar and DSY. But apart from that, you will see that sometimes AUD will be dropping, GBP is not dropping. So you have to understand, you have to shift that mindset of always believing that every pair is correlated together, and focus more on trading with the data, combining it with the retail sentiment. So looking at DSY data here now, you see that DSY is more bullish than bearish, but something crazy has been happening on DSY. We are seeing a drop on DSY. Am I bearish on DSY? No, I'm not really aggressively bearish. The bearishness I'm seeing on DSY is for a short time period, because if you look at the data here, you will see that they are more bullish than bearish. And look here, since August 6th, you see they are adding on longs, they are adding on shorts. Now they took profit on long, they took profit on short. But if you look, you see that the profit taken on long, on short is much bigger than the profit taken on long, and you see that the adding on long is more bigger than the adding on short. So they are playing games here. That's why you shouldn't be using what is happening on DSY to judge other USD pairs, because you should be judging other USD pairs with their data. Just focus on their data. Like GBP USD now, we are seeing that the institutions are getting maxed out on their long position, and they are beginning to take profit on long. So for the coming 2-3 weeks, we are going to begin to see a drop on GBP USD, which is the same with euro and other pairs. And on here now, we are seeing that the institutions are getting maxed out on their short on USD JPY. We are seeing that they are getting maxed out on their short. Simply means on we might start seeing bullish momentum start kicking in the next 1 week to 2 weeks to come. And here on USCD, we are seeing that the institutions are currently taking profit on their long aggressively. So we are expecting more downside to come here. So you have to always treat every pair differently. Don't try to say when DSY is selling. No, always treat every pair different. Because me, I trade DSY. I actually took a trade on DSY and as well on USD CHF. As you can see, I don't really trade USD CHF much, so I recently started adding the data to my spreadsheet, and looking at here, you will see that the institutions has been adding on their short and taking profit on their long. So I took a trade here. Let me quickly look at it. I took a trade here somewhere around here, but which I took based on the 4 hours here. You can see my entry was somewhere around here, and when this pullback happened, I was holding it took out this minor supply area here. Then the market created another new supply area here, market drop. So when I saw this happen here, even on the Telegram group, I told everyone I closed my trade. And I think after I closed my trade, it made a couple of things went on the group. A couple of people left the group and all that. I just laughed. So why I closed off this trade is because, based on retail sentiment 94-91, I see that they are getting retail traders are getting to their mastered number, and if they are going to start offloading their long to start getting into shorts, market is likely going to buy. But after seeing the data that okay, this long position has been reducing very aggressively, while this short has been increasing from 5,000, they increased to 9,000, now they are sitting on 8,000, while the long from 56,000, they are on 29,000. Now you see that. So that's why I closed off that trade. So I closed it off to wait for the market to align with the data, and the EMA 200 is currently above. That's why I just closed it off. So I'm going to wait for the data to start showing me the same thing the chart is showing me before I will start buying, which was my reason of closing this chart. And the reason why I'm making this video this long is because I want to explain and make things clear to everyone that is following me, for you guys to understand my style of trading. Because since I don't sell course and I don't teach trading, I just call out my trades, and I think it's only fair that I make this clear and for everyone that is following me to understand my style of trading. So looking at DSY now on the 4 hours, you can see that ever since the market gets here, it broke structure. This is where I took my long position, which when I closed off my USDC, I as well closed off this trade. I posted this on the Telegram group, which if you check, you will still see in there. I closed off this trade based on, when this area got removed here. I held this market, it came down to here back, and when it got here again, I see that this same thing that happened on USDCHF is happening here. What am I going to do? This new supply area that is got created, I was expecting, since this one has been removed before this got created here, when the market got here, I expected to remove it and continue to the upside. But after looking at this data and looking at USDCD, USDCHF, and USDJPY, I see that all these pairs are currently bearish, though DSY is not really bearish. But if all those pairs are bearish, they are going to drop. That means it's going to affect this. So I closed up this trade as well, which everyone that took it with me, if they closed the same time I closed off around here, they are on profit. So we are now waiting to see if this is going to continue to the downside or if it's going to take out here. So once it takes out here now and start creating a new demand, we'll be looking to start longing from the demand zone. For now, I believe it's much better that we step aside and wait. So looking at the daily time frame here, you can see that it removed an institutional weekly demand zone here, and this minor supply here. The market has been around here, playing around. As you can see, the market is much clear here, which is the reason why I closed off that trade. Though we got this rejection candle and this one as well closed like this, as we like call this a hanging man. Yeah, this is a hanging man, and hanging man simply is it hanging man or what, or hammer, something like that. So if a Monday candle turns to bullish engulfing here, we'll be waiting for this zone to get swept off and for the market to start creating a new demand here for us to start looking to start longing this. But looking at the chart, there is a possibility for more drop here, which is the reason why I closed my trade. You can as well call this a little demand area, which doesn't really make sense, because this institutional demand just got removed here. So applying another demand here doesn't really make sense. So you have to always allow the market to play out. Don't try to force market or to be in very, very early. So this is it, and I think I'm going to end this video here with everything I have shared, both from the data, what played out on a couple of pairs previously, showing you guys the pairs that I'm looking to trade for the coming weeks based on the data that aligns with the data. If you watch all this and you still don't understand my style of trading, you still don't see the way I trade as the best way to trade, then I don't know, you can as well go to some other places to learn. So this is our retail sentiment now. So looking at retail sentiment, we see that Euro USD is currently, their short is currently on 78%, which I will expect it to still push to the upside to get max out to 94% before I will start shorting. GBP is currently on 83%, which I would like it to still push up and get to 94, 96 for me to start shorting. So there is a possibility for more upside here. Looking at USDJPY, you see their long is in 66%. I would like it to get to like 94 for me to start longing. Same thing with here. If you look at USCD, you will see that their short position is still on 34%, 39%, while their short position is 39%, while their long position is on 61%, which I expect as their long position to go up to 94%. As you know, more they are increasing their long, that's when markets will be dropping. So I expect them to increase this long, and they are increasing for price to continue dropping. AUD USD, you can see their long is currently on 64%. Okay, that's all. So that's all for now, guys. Let me just kind of leave it like this. Let me check USD CHF. Where is this motherfucker? So USD CHF, as you can see, USD CHF is currently on 83%. So we are going to wait to see what the next data will be. If we start seeing buying momentum kicking, we start buying, but I expect to see more drop on dollar. So guys, I hope this video is very helpful to you guys, and if you find this video helpful, please guys, feel free to subscribe to the YouTube channel, and as well help share the video for other people to see the video and join our community. So you guys have a wonderful Sunday.